Well, thanks for joining us on a Friday. I'm Marlon Bowling with you as we watch your ag commodity trade. Let's go right to the futures, and I want to take a look at what the corn and soybean trade is doing right now with live quotes. So let's go and take a look at this corn market here. On the corn board, we have July, which by Monday, again, I'll reiterate, it's going to be the lead month. May goes off the board today. July now 1 3/4 higher. Now 1.5 higher at 3.70 3/4, within a penny of its high of the day. We have December up a penny and a quarter at 3.88 1/2. And looking at the soybean trade right now, you have July currently 2 3/4 lower at 9.63 1/2. November down 3 at 9.61 per bushel. And on the wheat trade in Chicago, we have that July contract now at 4.36 1/2. That's up 2 3/4. Meanwhile, Kansas City July is now trading at 4.43 1/2. That would be up 2 3/4 cents on the day. The Minneapolis spring wheat trade would have July now a 1/2 cent higher. Last trade 5.48 3/4. And in the cotton market, you now have your July contract still 300 points higher at 82.18. Let's go visit with Allendale Incorporated, where we have Steve Georgy standing by. He's in McHenry, Illinois. And boy, Steve, lots of excitement in the cotton market of all things today, just kind of stealing the spotlight from all the other grains. But lots of action here this past week. What are you looking at today?
You know, there has been a lot of action, and a lot of this is focusing on a couple different things. Certainly the USDA report that was out earlier this week, and, you know, we've got big numbers, old crop and new crop, but for corn, beans, and wheat for that matter. The biggest surprise coming out of beans, and a lot of questions I've been getting, is why are beans breaking if we're only at 480 million for new crop beans? And I think a lot of that has to do with the weather coming up. We're going to get these things planted. We're going to see a pretty decent pace, and it looks to be warming up. So these are all things that are conflicting. But moving forward, I think the bigger question is, though, is what's going to happen with these funds and fund positions as we go into summer, as we get into June and July. Will we see these funds come out of some of their big and massive short positions?
Right. It would be highly unusual, right, for them to maintain a stature like that as you go into the growing season, because there's always some sort of a threat to the crop at some point.
Yeah, you know, in 2015 was the last time that the funds were short corn, beans, and wheat going into June. It was June 1st when they flipped their position, and actually they went from short positions to long positions for corn and beans, but they remained short in the wheat with just a huge global supply of wheat. So will that happen again? I don't know, but I have a feeling, though, that it's not going to be that something is turning so bullish. It just may be that things just may be less bearish. This perfect crop and this idea of this perfect crop is just becoming less perfect. Will it be, is it too much rain? Is it a replant? Is it too cold? Is it too hot? To whatever. Just the idea of being less perfect may get these guys to come out of some of their short positions and give us a rally as we get going into summer.
You know, I see where the U.S. dollar index value has been weakening up here today. I just wondered if that was much of a factor in the grain trade here today.
You know, I think it is. I think that is helping with things. We'll see how these beans finish out, too. Export sales this past week, they were dismal. They weren't very good. But can we start to see some more demand pick up as well? If this dollar starts slipping, can we see demand build here in the U.S.? That may be a possibility, but I think it's helped driving things higher here this morning.
All right. Well, Steve, thanks for the input into the markets here. I appreciate that very much. Steve Georgy is with Allendale Incorporated. He's based in McHenry, Illinois. And Steve, if you can, I'll bring you back here in just a moment. We'll talk a little bit more about the markets. Stay tuned. We'll have more on the livestock side when we come back. Well, it's my pleasure to be visiting right now with Steve Georgy of Allendale Incorporated. He's based in McHenry, Illinois. We kind of touched on some of the grain trade and also that limit up move that we're seeing in the nearby cotton contract. I want to talk about our livestock trade here right now and bring Steve back into the conversation. Okay, we have some upward moves in the cattle complex here today. Steve, the live cattle board, will go ahead and bring that up for everybody so we can reveal the latest live quotes from Chicago. Still $1 higher in the June contract at $124.92. August up $1.47 now at $121.15. And you have your October contract $1.95 higher at $117. $17.60 per hundredweight. Meanwhile, if you look at that feeder cattle trade, currently the August contract $3.20 higher at 150. Well, make it $3.30 higher at 150.62. September $3.33 higher at 150.75. So big moves higher, led by the feeder cattle trade today. It seems like some outside news that's really impacting this cattle market, even though we did close lower yesterday.
Yeah, and what we've seen prior to today has been just liquidation or moving around from these big index funds that have been carrying massive positions for cattle. Mm-hmm. And so they've been adjusting those positions. We've seen this turn. We still have most of the trade, cash cattle trade, sitting around 138. But today the story has been that U.S. and China agree to a deal for beef, exporting beef to China. Now, we started off today, we've got this big excitement, and oh my gosh, we've got to go higher because of this. But there's still a lot of things that we've got to also listen to. These exports really don't open up until July 16th. But a lot of questions. Are they going to take hormone-implanted beef as well? Now, China has a mandate right now that their farm to plate ID system that they have, how are we going to change? How are we going to get that? Well, we need to change our system in order to really comply with what they're looking for. There's a lot of questions with this yet. Yes, they've got this deal, and it seems good at the surface, but there's a lot of questions that need to happen. So you've got this emotional move higher today from this. Can we stay higher today? That'll be the next question. Will we see some switching of fund positions again in order to keep us working a little bit lower?
If it weren't for the Chinese news, would the market be lower today?
I have a feeling that it could, yes. We've had the Goldman roll that has now been moved through. We've got some finishing up there. But I think there's also a point when you have cash cattle still trading at 138 and you've got these June contracts where they are. We only have another couple weeks, and this has to meet. This has to come together.
Right.
And so at some point here, it seems like we're pushing a ball underwater, that when we let that ball go, it's going to shoot back higher. It's going to go back to where it needs to be. We're at such a discount right now that there's a point that we can see something like that. Is that today? Is it next week? I don't know. But this story certainly helps it out.
On the lean hog trade, we'll take a look over there and see how the futures are doing at the present time. We have the June contract 3 cents higher at 77.08. We've been on both sides of unchanged. July now up 52 at 77.60. That's only one tick now from our high of the day, and the August contract is now trading 20 cents higher at 77.35. Steve, great information. I appreciate that very much. Steve Georgy is with Allendale Incorporated, based in McHenry, Illinois. Need to get more insight in the markets like that. So great guy to talk to about it.
Absolutely. I'm sure we'll hear more about China as well as we go on throughout the day.
Yep, you bet.
Thank you so much, Markets Editor Marlon Bowling.